like to welcome everyone today, and hopefully we'll cover information that is really useful for you. We are in a time of disadvantage from it's going to be somewhat of a high level, but please, if you have questions, put them into the chat. I'm reserving quite a bit of time at the end of this to go through a lot of those questions. This is, again, extremely important for businesses, whether you're a startup or have been in business. And there's a lot of information. So if I kind of breeze through something, you say, wait, hold on, I want to know more about that, put it in the chat. I've been doing this for a while, so a lot of things just kind of seem second nature. I think, okay, everyone knows that. But again, there's so much information in financials and all of the statements that you have to produce and things like that, that it can be overwhelming. So I try to start at the high level, and then we'll kind of work our way into more of the details. For today, so basically the topics we're going to talk about is really what is a financial projection, why financial projections are needed, what's included in them, and how you create financial projections. So again, at a high level, we'll go through things and leave questions and answers for the end. So we'll basically start off as really what is a financial projection. So this is basically a forecast of your future revenues and expenses. So when you look at your business, whether you've been in business for a few years or a startup, you want to get a good idea of what may happen into the future. And forecasts are basically done on a 3 to 5 year basis. Past that, it gets the data gets messy, and it's not as easy to predict what's going to happen in the future. So we usually keep, and even at startups, I keep it about 3 years for a projection. If you're not a startup, a lot of that historical internal data is used for your business forecast. So it gives you a good starting point of kind of saying, okay, what has happened in the past? How will that change in the future? We also use a lot of external market factors to help with our predictions. So this may, not only whatever service or product you're selling, but you have to look at kind of that consumer demand. Are you a commodity? Is it a high dollar item? Are there other competitors? Are you a new entrant? All of those external market data information you need to look at when you do your forecast. The more information you can find, the better your forecast will be. We also look at industry benchmarks. So this is a key of knowing, are you on track? Are you underestimating? Are you overestimating? Do you know what the industry's been doing? There are, and we'll go into this a little bit more detail. There are benchmarks you can look up for your industries, and it gives you a great idea as if your forecast is on track, or if, again, you're under or overestimating. So again, financial projection is just basically very high level, a future forecast of your revenues and expenses. So understanding what the business will do in that 3 to 5 year time span. Things that make up the forecast. So there's a lot that goes into this. And when I start with clients, I always start at the very basic of saying, what do you think you're bringing in on sales? What are your high level expenses? And we, start drilling down once we talk about those numbers. But it's really a startup expenses. If you're a new business, are you acquiring a building? Do you have, what are your expenses with creating your product or your service? What are your marketing expenses going to be? Do you have insurance costs? Do you have telephone, internet costs? So really, anything that a client can think of, we put into their startup expenses. Payroll costs are another big one you have to look at. We'll, again, kind of going into this a little bit further into the presentation, you have to think about, not only are you paying somebody on an hourly basis, but what all do you have to do because you have employees? And we'll talk through that some as well. Your sales forecast, what do you think you will do on a month-to-month basis? A lot of businesses tend to be cyclical, or they have some high months or low months. So we think about that. Do you think your marketing efforts won't play out until month 6? Then your sales will increase. So you have to think about really on a high level, how many widgets or products or services that you're selling and what you're selling them for, the cost of those, and just predict what you think you will do in the future. A lot of this, again, we go back to those external market data. So are you able to capture a certain segment of the market that no one else has? Are you entering and hoping for the best, which may not be a good strategy to begin with. Again, we just look at what do you think you can do, and the sales and the expenses are on a month-to-month basis for that first year. So you do have to kind of break them down. Doing a year as one number sometimes is easier or more difficult, but a lot of times we want that first year of the forecast to be broken down into the first 12 months. Operating expenses for the first 3 years, and I have 3 years on here because a lot of times with startups, we just do the first 3 years, but you have to think about anything that you may be putting into the business in those first 3 years and what those costs will be. Cash flow statements, again, we'll talk about this specifically when we go into the different statements that you will generate when you create financial forecast. But cash flow statements for the first 3 years in business, again, will enable you to see whether you have positive cash coming in. Are you able to pay all your bills? That's basically at a high level what the cash flow statement will be. Income statements, again, what are you bringing in for the first 3 years? And then lastly, that balance sheet. So when we do financial forecast, it really comes down to a profit and loss statement, your cash flow statement, and the balance sheet. And I'll go into these in more detail, but all the numbers that initially you gather for those will in turn be inputted to create those statements. And each has a purpose. Each allows you to better predict or understand what the business may do going into the future, and helps you understand how much equity you may be able to take out of the business as well. On how financial projections are calculated, so there's a lot of numbers that get into this. Doing it by hand is not something I recommend. You will get kind of lost in what number goes where. Did you include something? Did you not include something? So a lot of times what I do is offer an ability to help someone through this. There are multiple Excel templates, web apps that you can, simply Google search and say, creating a financial forecast, and they will help you down that path of where all your numbers get inputted. But there is one that our company uses, and we have found that it's probably one of the more user-friendly ones that we use, just from the standpoint of it's easy to input your expenses and revenue. They help you estimate your tax rates. They help estimate some of your payroll costs. And the more that the help you have in creating those forecasts, I think the more confident that you will feel in the end when they get the end results are produced. And those statements are auto-generated when you use LivePlan. So instead of saying, okay, how do I even make a balance sheet? LivePlan will take all of your numbers and create it for you. There are other web apps that will do that too. I can't speak to those. We primarily use LivePlan. So that's kind of the example that I'll go through and so you can see exactly what you need to do for your forecast. So this is LivePlan. Now, we don't get paid by LivePlan to promote it. We just use it as a great service. But this also within LivePlan is the ability to create business plans. And this is basically how we get started. And my job at SBC Advising is really helping businesses create business plans. But as part of business plans, you have to create your financial forecast. So just kind of a high level of within LivePlan, there's certain tabs at the top: pitch, plan, forecast, benchmark, schedule, dashboard, options. We're going to focus today on that forecast tab so you can get a feel for how forecasts are developed. If there's anything in the future, you say, I need a business plan, this plan tab is where you would be working. And it basically gives you an outline of how to create a business plan. Very simple, easy, which is why we like LivePlan. But going back to forecast, and this is just a demo company. This is a made-up company. So if there's questions about this one, just let us know, but it's not something that is true. It's just something that we can help clients through of understanding, where to begin basically on their forecast. So within the forecast tab, the first thing you start doing is this financial tables. And you can see it across the top. It talks about the revenue, direct costs, personnel, expenses, assets, taxes, dividends, cash flow statements, and financing. So one good thing about this is it's giving you basically all the categories of where you need to think about your numbers. And I start clients at the very beginning with revenue. So if you look down on the screen, LivePlan lets you input specific line items for revenue. So this is a bike shop. So they're going to have parts and accessories. They're going to sell clothing. They're going to sell new bikes, fixed bikes, sell used bikes, etc. So what they have predicted is put in numbers for each month of how much they think they're going to make on a month-to-month basis for that specific line item. We always tell clients too is that it's something if you have a high level number of, I'm going to sell 100,000 total, that's great. But the more that you can detail, even better. So the way we talk about this too is, you need to know exactly what will affect your revenue. So if you just put in a high level number of 100,000, well, what if one of your your products doesn't sell as well? You'll never know. So really giving you the details is better. It takes longer, it takes more thought and effort to go into it, but in the end, you'll be able to directly go say, okay, maybe selling clothing in this instance wasn't what I thought it might be, and that way it can help evaluate your business in the future. So not only are you creating a forecast to understand, but your forecast will be used once you start having those numbers come in to judge against your forecast to see how well you're doing. So again, all the revenue is in one section. And within LivePlan, you can be very specific. Again, we want to make sure that you are. But once you have all the revenue into LivePlan, you can move to your direct costs. So direct costs are basically anything that is affected by a sale. So if you sell something, it makes you spend a certain amount of money for that sale. That's at a high level. A lot of service companies may not have any direct costs. But this is something within your business you can really go through and say, okay, if I'm making X product, what do I have to spend to make that product? A kind of a high level example that we give is, the raw materials that go into making a bike, that would be a direct cost. It gets a little fuzzy on direct costs and expenses. So when you're working through this, you try to separate as much as possible as you can. And your direct costs can be tied and should be tied directly to a revenue line item. So again, we're getting more confusing as we go. But as you can see down here, it says accessory and parts, cost of goods sold. So this is directly tied to that revenue stream we talked about in the beginning. Again, the more detail you can put in, the better you can analyze your business. It's not just one direct expense that they've put in. I think each revenue has a direct expense associated. And again, it's a product. So if it's a service, that may not necessarily be true, but you just have to evaluate, okay, if I spend this much money, will it affect when I sell it? Or when I sell this product, what essentially am I spending to get that product sold? Direct labor is also on here. Let's see if So this is basically the same thing. If you're selling a product, you have to pay someone to sell it. And this is where they're putting those salary and wages in. If you're owning a retail store and you're paying somebody a solid salary no matter what sells, that's not a direct cost. So that would go into the personnel category. Again, a lot more details on these, but just think of it that way. Direct costs are always associated with the sale of a product. Within this, so you can kind of see, and I can scroll over a little bit, they are detailing, they are detailing that first 12 months. And then past that, it would be years. And this was done a while ago, so the dates are kind of negligible. So, but then you start saying, okay, they do total the year and then start onto the next calendar year. And the one thing too about LivePlan is I could click a button and I could simply show the year. So that way, if you do just want to get a high level, you can see that for your direct cost. All these numbers that we are inputting, again, are going to go into those statements that are needed at the end. So the more you can think about what you're selling, how much you may bring in, and all the expenses associated with that, the better. The next tab is personnel, and I briefly touched upon that. This is showing your head count. Your direct labor does show up in this, even though it's inputted into the on the other screen. And then some of your other, let me scroll down, your other labor that will be into this. So do you have a salesperson? And they're saying here, giving more detail, like this person's only working 30 hours a week, but at least it gives you that reminder of, okay, this is how much you have to pay them. One thing in LivePlan is when you add your personnel, and I'm just going to do one real quick, you can add it as an individual or a group of employees, whether it's regular labor or direct labor, so that way LivePlan can correctly categorize it. And you can do this as constant amount or varying amounts over time of how much you pay them, when they start, and what that annual raise will be. The next thing that you can do is actually change burden rates. So burden rates is basically all those other expenses when you have salary employees. So the workers' comp, the insurance, everything that you have to do when you hire a salary employee. And LivePlan estimates that for you at 20%. So if you don't know your number, or if you don't have a good idea about that, the good thing is LivePlan saying it's about an average of 20%. So once you have personnel, so you have your revenue, your direct costs associated with your revenue, personnel, and then you go into kind of your everyday expenses of no matter how much you sell, you will always have to pay. So in this example, they do bookkeeping, so your accountant, insurance, leased equipment, marketing, supplies, utilities. Again, anything that when I talk through your expenses, I always say, what bills do you have monthly that you're paying? And a lot of times that helps kind of clients get onto that schedule of thinking, okay, I have to pay my cell phone every time. I have to pay my internet every time. And even if it's a matter of, it's a $50 item that you're putting in here, that's okay. Because at least you're thinking through all your expenses. And I'll show the monthly detail on this too, just so you can see. So, for this, it's a standard $1,000 a month every time they have to pay their bookkeeper, which, depending on what you're doing or what that person is doing, you have to estimate some of those things of what you're going to have completed. Insurance, $1,000, lease, they're paying $12,000 a month for their lease, which sounds really high. Leased equipment. Again, you have to think through, exactly what you're going to do. And a lot of times with startups, that's part of why we say you probably should have a business plan. So not only creating those forecasts, but when you think through it in your business plan, it gives you a better idea of exactly what numbers you will have. And it makes you research things too. So you may not know how much you might want to spend on marketing. You may not know if you're going to do social media, if you're going to do a paid search in Google and things like that. Once you start researching, you can get a better idea of exactly what that number may be. There's a lot of resources for estimating. You can Google so many things in this world today. So if you're a little unsure about something, just go ahead and type through it and say, okay, if I were to do a social media blast for a month, how much it might cost. You're estimating at this point, that's a forecast. You try to get in line with what you think your numbers will be at the best you can. I can't stress that enough because a lot of people will get really worried that they have no idea what that may cost them. But just with a little research, you can get a good average and a good idea. The next thing on financial forecast we talk about are assets. So this is basically current and long-term. In this company, looks like they just have long-term assets. So basically what you own. And this assets are excluding cash, accounts receivable, etc. So, say you buy a truck, it goes into this section. You own it and you need to account for it. LivePlan allows you to do depreciation schedules and things like that. I'm kind of leaving that at the high level, but just know from an accounting aspect that will have to be taken into account. And some of those statements at the end that we'll go through has some of that in there. So if you're not sure of how to do depreciation schedules, an accountant will help you through those. Speaking of accountant, taxes. This basically is, again, a high level. So, LivePlan is not able to say this is exactly how much you will pay in taxes based on this income, etc. but we do want to get a kind of a round guess of how much you may have to pay in income taxes and sales tax. So in this situation, they didn't put any tax in, which is fine. But again, the more information you can put into your forecast, the better off it will be. And setting tax rates, usually you know what your sales tax rate will be within your county, and you just use that. An income tax rate, LivePlan does give you an example, and I think it's set at 20%, of your income tax that you will pay. And it allows you to select, are you going to pay it monthly, yearly, quarterly, etc. Again, just doing this at a high level. And if you have questions about your taxes, an accountant will be there to help you. But you just want to get a kind of a basic idea of how much money that you will have to spend on taxes. And it will make your financial statements look like you've really thought through everything. Dividends is the next section of, if you have shareholders, or if you're paying like a member withdrawal or member distribution, this goes in the dividend section, how much you may pay yourself if you're not an employee. Nothing's in this LivePlan example, but again, just know that there is a section. So if you plan on paying yourself, you need to make sure you have that inputted if you're not considered an employee. Or if you do have shareholders, do you plan to give them certain dividends every quarter or every year based on the growth of the company? Again, it's just really wanting you to pay attention to what is going out in the company and what is coming in. And any number that will affect your cash statements or your balance sheet needs to be inputted. Another good thing that, a lot of times when we think about financial forecast, it may kind of be in the back burner, but your cash flow assumptions. So within LivePlan, they allow you to say, okay, how many sales are you going to do on credit? Meaning, are you going to give someone 30 days to pay for something? And you expect 50% of your clients to do that. So when I scroll down, you can kind of see what I'm talking about. On Garrett's Bike Shop, they said, okay, 50% will be paid on credit, and by 90 days, they will have that money. So what that does is it really affects your accounts receivable. So it's saying, you don't have that money now, but you will have it in 90 days. So again, it just makes your financial forecast that much more real with understanding where that money is coming and going. And accounts payable is the same thing. So basically, are you paying your vendors on a certain schedule, or are you paying them as soon as you get your bill? And it looks like within Garrett's Bike Shop, they said, okay, 59% of our vendors were paying on credit, and they're allowing us 45 days to pay. And again, it just affects your cash when you look at your statements. It just is something to, even make your financial statement kind of stand above someone that may not have that in there, and helps you understand, are you going to have enough money if you allow your clients to pay on 90 days? Will you have enough money each month to cover your bills? LivePlan also has an inventory feature, which is on in here, and there's some things to go through for that. But again, high level, if you have inventory, click yes, and it'll take you through it. If you don't hold inventory, if you're a service, then you don't even have to worry about that. And lastly, financing. So one of the main reasons that we do business plans and financial forecasts is because potentially we need some sort of capital infusion. So within your forecast, you want to state, okay, if I'm going to get an investor or a lender, I'm going to get X dollars, when do those X dollars come? And, what is your rate that you have to pay them back at? So again, you're able to add those things into this application. So adding a loan, investment, another line of credit, or anything really, any capital infusion that can go into your business, you put into here. And it, will help you understand your projected cash and what kind of cash you'll have at year end. So once all those numbers are in, what LivePlan, and the reason we like it so much too, is it auto populates the statements. So if you were going to apply for a loan or even provide information to a potential private investor, they're going to ask for your profit and loss statement, your balance sheet, and your cash flow statement. So we'll go through those here now. So profit and loss, and I'm going to do this kind of at a yearly just to make the numbers look not so cumbersome. Here, I'll put that here. But profit and loss basically tells you how much is coming in and how much is leaving the company. And if you're making any sort of money. So at the end of this, you can see at the very bottom, your net profit percentage is 6%. If it was negative, you are not making money. We often think that that net profit between 5 and 10 is kind of in that healthy. 5's a little low, 10's pretty healthy. If you hit a 20%, you're doing really well. You're 40%, you may relook at your numbers. So looking at your kind of net profit percentage to see if that business is going to be successful, if it's worth even venturing into this space. But again, LivePlan takes all those expenses and profits that are sales that you put in to create this. So profit and loss for each year. And again, this is just a 3-year look. And you can see that this company's done pretty well. The revenue is listed with the direct cost associated with each of those revenue. You get your gross margin, and then your operating expenses follow. I'm doing this quickly, high level, but this is basically a profit and loss of taking your sales and expenses to see if you can make the business work. The one thing too about LivePlan is you can print this chart off. So this is the other thing of saying, if an investor wanted to look at this, they look at these consistently. They know exactly what all these line items mean and where your numbers should really fall. So that's a good thing of, you've put the thought and effort into it, and LivePlan enables you to have a really nice looking profit and loss, nice looking from a standpoint of prepared, depending on your numbers, how good it looks. The next item is the balance sheet. So when we look at balance sheets, it's basically your assets and liabilities and equity. So this gives you the ability to say, is the business going to be profitable? Are you making the money? Or do you have earnings every year? Are you able to pay off certain debt? It's a lot of confusing words, I think, when you first look at it, because you're thinking, okay, here I have all my assets, I've got my cash. Here's that accounts receivable. This is basically your sales on credit that you are waiting to be paid. And here's that inventory line that we talked about. Here's your long-term assets and your just depreciation. So again, when you talk about if you own, a big piece of equipment or something, and you use it daily, it is going to depreciate. So you can have that spread across multiple years when you do your projections. And your liability and equity. So what current accounts payable do you have? And again, the sales tax and income tax is not inputted in this one, but it would be. Right now they say 0. And then, after you've taken care of your assets and your liabilities, what is that equity of the company? And then here, the retained earnings of what's staying within that company is pretty significant over the next course of the 3 years. Okay. And the last statement is cash flow. I typically start, when I explain this to clients, is we start with the profit and loss, cash flow, and then go to balance sheet. Just because balance sheet kind of takes a little bit more thinking to get used to where the numbers are. But cash flow is one that this is showing you basically how much money do you have in the bank. Are you able to pay your bills? You can see in this one, the first 3 months, not looking too hot until they start making a little bit more money. Again, it's just a way to analyze the business. And to go through exactly, are you comfortable with what you may potentially have in that bank account at the end of each year? But you can see this one, a lot of times we just look at cash at the end of the period, the very last line item, saying, okay, once we get some money coming in, this changes. So 2020, if we can handle having that low cash and we can make it through, then 2021 will look better. And 2022 looks even better. Again, this is, made up business. There's a lot of things that you can put into this, but it just helps you analyze that cash flow and what's coming in and what's coming out from a cash basis. So when you're done with those 3, the profit and loss, balance sheet, and cash flow are given to a lender or a private investor, and they are able to see how healthy your business may be. It's something, the more detail that you put into them, the better. The more things that you can think about and the closer you can get your numbers to things are really important. The one thing I will talk about real quick is those benchmarks. And I said that you can look up industry benchmarks and think, okay, are we in line? Is my forecast under or over? what currently is happening in the industry. So the one thing about LivePlan is that we like is you can go in and select your NAICS number, and they have a whole list of them that you can try to find the industry that's most suited for your service or product. And then what it does is once you have your numbers in there, I can say, okay, gross margin for this industry is 38 and you forecasted 41. That's pretty good. You're pretty much in line. If you look at net profit, benchmarks 5%. Right now, you're at 4, so you're down a little bit. So maybe you can go in and try to adjust numbers and see if anything will change. It highlights things that are quite different. So in this industry, the average days to get paid is 7 days. Well, they've selected 45. So you may not be realistic in saying that 45 is good. Or average days to pay, again, 62 versus 27. So it just allows you some regs for a sense of saying, okay, let's go look at what we've inputted and maybe change a few things. Okay, so we're talking about the different forecasts. So what LivePlan is saying is, you can go in and if you want to change some numbers to see what that forecast may be. So when we talk about looking at those benchmarks, you may go back and say, okay, well, let me change, XYZ. LivePlan will allow you to do that. So you go in and in this forecast that they want to look at, and again, it may be simply changing one number or 1 month just to see what the forecast will do in future months. So it's really easy. A lot of times they could just let you copy your whole complete forecast and then go in and change a few things. But again, it just gives you the ability to really analyze your business. So in lieu of time, and I want to have time for questions, we will kind of stop there. And I don't know, Amanada, if you've got some questions in the chat at this point, or
hold on, let me see.
Want to continue. But forecasts have been something that really important. And once you kind of start dealing with them, the more you can understand them, the more you can understand your business. So a lot of times people will create that forecast. And one other thing within LivePlan is you can actually go in and they call it a dashboard, but you can have, once your business is up and running, you can have your current numbers based on your forecast. You can say, okay, did I forecast correctly? What has actually been happening? So that's another thing, kind of in the future that, and a lot of, every business out there from like a large corporations, they always have to do their forecast versus actual. And again, so that's kind of their check to say if they've predicted the right way.
Looking at the questions here, yeah, there was a question about benchmarks, which you've already shared. So basically asking resources for identifying industry benchmarks. Are there any other ones that you can think of other than LivePlan?
You can go, again, Google provides a lot these days. So you can go in and search. LivePlan just gives it to you quicker. For lack of better, you don't have to search as hard. So I do not know any other specific ones that you can, like a specific website you can go to. I can look some of that up and send it out if I find any. But yeah, we just use LivePlan because it's been so easy.
And then the other question, did you want to continue? Or do you want me to
go ahead?
Go through the, okay. The other one says, wouldn't a bike shop have seasonal factors? I think this is going back to when you were looking at the projections for the bike shop. Because I think you were looking at the monthly revenue for the bike shop. So Naomi was asking, wouldn't a bike shop have a seasonal factors impacting the cash flow projections?
Yep. So on this, I'm just I'll click some on revenue. So within LivePlan, you can go in, let me go next here. You can change it. So kind of going based on, if you've got revenue that's higher a certain month, and this is the good thing too about LivePlan is you can also do this in expenses. So it's the same concept. You can go in and change it on a month-to-month basis. Well, maybe if I can get back there. Let's see. Hold on. Or you can do constants. Let me go back to varying. Okay. So this allows you into the month of what to put, and here's the months down below. So if it's something cyclical like that and saying, okay, I'm going to have a really high summer, my winter's not as good, this is one way to predict that. They just allow you to do that the first 2 years, and then the third year of your forecast is just a single number. Or if you're doing a 3 to 5 year, that third, fourth, and fifth will be a single number, but it at least gives you the ability to do the first 2 years.
That's good. And then there's another question asking, is there a free version of LivePlan?
If you are in a program such as the Women's Business Center, we help you out with that. It's actually pretty inexpensive. I think it's like $15 a month to use LivePlan, but I do not believe there is anything out there that if you just go on yourself and type in LivePlan, that is free, unfortunately. It's a great program and there's a lot of resources within it. So just understand that your $15 is probably well spent. I do want to stress, like with these financial forecasts is something you really can't go to a lender without them if you're needing capital. And really predicting the way you think your business will be. I've done several clients' financial forecasts and we've said this is a no-go for their business. It really helps you get a better understanding of what will happen. It makes, ability to have you set your own goals and to stay on track. I think that's one of the more important things, not only do you need these for potential capital, but to really make sure that you can become successful as you want to be in getting your forecast. A lot of people don't want to look at the numbers. It gets confusing. There's a lot to add, but it's really something that if you can't get your numbers to where you want them, then you really have to reevaluate your business. And if there's something different that you need to do or, complete different industry or anything like that, it gets you set up before you start making investments, and that kind of goes downhill. So again, it's an exercise that I think startups for sure have to do, but even once you're in business, reevaluating your forecast and doing it on a 3 to 5 year basis is a good idea.
Meghan, thank you so much for spending some time today with us. We truly appreciate it. And this was some really, really great information. Well, thank you, everyone, and enjoy the rest of your afternoon.
Thank you.
Thank you. Bye, everyone.
Bye-bye.